Hi friends, I am your Joel John. So now I am going to talk about share markets, and this video is going to be fully in English. The reason why I am speaking about share market is in insurance you have ULIP plans and endowment plans. If you are not still good in share markets and mutual funds, you have a lot of terms and you are not ready to take risk, you can go with the endowment plans. But there are very good companies like LIC which give a very good return on that. But still you have to know about share market. Why? When you write exams, share market questions are there, and the NISM exams are there, and the share market knowledge is required for people who invest on ULIP as well, because some of the ULIP give options for you to select the type of companies in which you want to invest on share markets, and also this is available on mutual funds. Apart from that, share market is something which all the listed companies are listed and they get a good amount of money from that. So you should definitely have an idea about share market, and this video will also be helpful for your investments, also for your examination. So subscribe, press the bell symbol, so that you will get my future videos on YouTube, and that will be useful for you. Also like and share it on your other social media accounts. Okay, coming into the point, share markets is an entity where listed company shares are purchased and sold. Often they call it as a secondary market. And if it's a secondary market, when the first initial launch will come, it is called as IPO, initial public offering. When this happens, when a company for the very first time issues its shares, they will approach SEBI. There are a lot of procedures to be carried out. They do that, and after doing a lot of checks, the SEBI approves, and there is a process of underwriting which is involved on that. Based on the underwriting, they will determine the face value, number of shares to be issued, and the IPO pricing, which will have an upper and lower limit. And based on the number of applications they receive, the allocation of the shares will happen. There are many IPOs which goes more than the offerings. So to get an IPO, it's really hard. You need a good lump sum of money, and even many of the best companies, after the IPO, once they get into the open market operation, the price goes much above the initial offering. So in short term also, there is a lot of good opportunity to earn money on IPOs if you invest on a good IPO. Okay, IPO is done. What is secondary market? After listing, there should be some kind of liquidity for the people who invest on shares. Today I may have a very good lump sum of money, so I purchase an IPO offering for about some 1 to 10 lakhs. Tomorrow I have a sudden hospitalization in my family. Of course I am covered on insurance, but my cashless doesn't go with that because I'm a smoker, or I did a drunken drive, so many things, or I didn't or excluded from my policy. So now my insurance is not claimable, so I have to go with the standard procedure of spending it from my pocket. So I have to unlist my shares. So secondary market is there, I can sell it there or use my bank money. So when I sell, whatever the shares on profit, I will sell it out. There are two types of things. One is called as short sell, and another one is called as you wait for 1 year then you sell. If you wait for 1 year, up to 90,000 up to 1 lakh, you are not taxable. That is 99,000.99. You can go like that, and after that you will be taxed under 10% slab as per the prevailing acts. If it's a short term, less than 1 year, you will be taxed 20% for the profits you gain, not for the entire margin. And there is also something which is called as loss adjustment, where if you make loss on other sales within the financial year, you can compensate that. Only the loss on the particular trading account could be compensated, not that all your other business losses within the share market business. Okay, so this is something about that. And another one thing is mainly talked about is called as follow on offer. FPO. What is a follow on offer? The company runs well, it has a very good reputation, and IPO, even most of the stock exchange, they ask for 3 years profit records, and after that follow on offer happens when the company has a lot of need for money. For example, I have a plant and I am meeting up my goods demands, and the demands increases. I was earlier operating on one shift, I operate on 3 shifts. still the demand increases. So what I will do, I have to put a new plant on my location or some other location where I can transfer the goods easily. But my brand copyright, everything is there. I want to keep my brand reputation as well. So I will go with my own company. And for getting the money, some I can get from bank loan. But my demand is as such that I have some 10 times, 15 times demand. Banks are not ready to pay that much of lump sum, and I am also not ready to pay too much of interest. But I am sure I can make a very good profit. Break even point, they used to say in lot of things. Break even point is something like you settle off your losses and the company balance sheet starts showing profit. I can break even on 5 years. So I go with follow on offer. That's already listed company. They will approach the share market saying that I am already listed, already based on underwriting. I have about some 5 or 10 crores of shareholders. They have to specify a particular figure. For example, I am saying 5 or 10 crores. And now the underwriter says based on my future supplier requirements, I have to expand for about some 5 times, for which I need about some lump sum of money. My share based on the trading history and everything can be priced at this much as a follow-on offer. So for this kind of a requirement, I need to issue these many shares. So after the SEBI approves, the follow-on date will be there. On follow-on also, there will be lot of people who are asking for allocation. Based on the approach, the follow-on allocation will be happening. So this is called as follow-on offer. Well, okay. This is understanding about share market. On my next video, I will explain about the benefits of shares, what kind of revenues you get from the share market, all those. Thank you very much for listening to me. Please stay tuned to my channel and subscribe and press the bell icon. Share with your friends on Facebook. Time to sign off. Joel John J. Bye.